Okay, let's continue. So just now I mentioned that now we're gonna prepare the we need to open up the repossession account. So as you can see here, we're gonna close the account receivable. So account receivable balance is 3,099 ringgit. And how do we get this? Basically it's the higher purchase price of 10,350 minus the deposit paid minus the installment paid so far for 8 months from May until December, and minus statutory rebate. So this is basically your balance in your account receivable. Basically this is the amount, and make sure also you minus the statutory rebate, okay, because of this entry just now. Okay, you credit account receivable, so you minus 11 ringgit. So the balance is 3,099. So we're gonna close this against the repossession account. Then since the owner has repossessed the asset, so basically the goods is coming back into the business, right? So when the goods coming back into the business, the company will debit inventory. Okay, remember this is the book of owner, so the goods is treated as an inventory. In the book of hirer, we're going to treat this good as asset, but in the book of owner, we're going to treat it as inventory. So debit inventory at supposedly 7,800, which is the fair value of this asset on repossession date. But since we have selling cost of 600, so make sure you deduct it first. 7,800 fair value, or the goods value minus selling cost. So 7,200, okay, to record the repossessed goods into the business. Then we're going to record for the repossession, storage and repair costs. Okay, so altogether here is 740. So credit cash 740 and debit repossession account of 740. Okay, and then the last one in the repossession account that need to be recorded is the amount to be paid. In this case, we have to pay to hirer just now, right? That's what we calculated just now. So we need to pay hirer of 3,361. This is basically the difference between the goods value plus total paid minus the amount receivable. So so we debit repossession account 3,361. Alright. So all these entries are made if the owner use immediate recognition of profit. Alright. Now what is the difference if the owner use recognize its profit based on collection? Okay, based on collection. So if it is based on collection, actually the entries are the same. Okay, if you go and compare between the one that is journal entry, okay, on the repossession date, basically they are almost the same with the one for immediate and collection here. Okay, first you need to recognize interest revenue for January, February and March. This is similar to the previous one. Okay, interest revenue of 98. Then you recognize for the statutory rebate, so you cancel off deferred interest revenue and credit it to account receivable. Okay, you reduce the account receivable of 11 ringgit, still the same journal entry, and then you close your account receivable account against the repossession account of 3,099. Okay, still the same entries made. And then you record for the repossessed asset at higher fair value minus selling cost of 7,200. Debit inventory, credit repossession account, still the same. Okay, and then on and then you need to record for the repossession cost, storage and repair cost of 750. Okay, credit cash, debit repossession account, still the same. And the repossession account, this is the payment. Okay, payment claimable by hirer. So owner need to pay for these differences. So we debit repossession account and credit cash. Okay, so they are so similar, right? So if you look at that, the above entries are similar to immediate recognition method, only for the following entries. So there is additional entries under base of collection. Okay, under recognition of profit based on collection. So what are the additional entries that you have to make? Okay, the additional entries is basically to reflect that the profit that we recognize, okay, the gross profit, which is the difference between sales and cost of goods sold, we cannot recognize them lump sum. Okay, we have to calculate the amount to be recognized based on the collection of installment that has been paid or received so far. Okay, so how do we get that? Alright, basically, okay, we're gonna close the deferred gross profit account. Okay, remember that last time we have additional account on deferred gross profit under based on collection. So we have an amount of 790, the difference. Okay, I think for this amount you need to refer back to slide 51. Okay, where we calculate the realized profit. Okay, so this is supposed to be the total profit, but during the year 2017, okay, this is 2008, okay, so up to December 2017, we recognize only 1,710. Okay, you need to refer back to illustration 5 on slide number like 51 or 52, something like that. Okay, you will see that the profit recognized up is 1,710. Therefore, the balance of 790 is not yet recognized, right? So now we're going to recognize it. Okay, so now we're going to recognize it. So we debit deferred gross profit, we close this account, and we transfer this gross profit to repossession account. So repossession account now have another entry. Okay, and finally now we're going to close the repossession account. So repossession account basically have a balance of 790. Okay, we're going to close it and transfer it to income summary. So since you credit income summary, it means that this is a revenue or gain. So this is a gain on repossession. Okay, gain on repossession. So yeah, that's basically the journal entry or the recording of repossession in the book of owner. Okay, so make sure whenever there's a repossession, you determine the difference between repossessed value and amount paid with the amount payable or receivable. So the difference will determine whether hirer need to pay or owner need to pay. Then you need to prepare the journal entry. Journal entry basically you need to make sure all the interest has been recognized, all the depreciation has been recorded. Then on the repossession date, you're gonna close the receivable account. You're gonna close the statutory, the deferred interest revenue account. Then you're gonna close the record for the entry of the goods into the business, and all the storage costs and so on. Okay, then record for the amount paid or received for the differences, and make sure that under the book of owner, determine whether the profit is recognized immediately or based on collection. That will give you the difference of entries of whether you should record for the deferred gross profit or not. Okay, so I guess that's all covering the topic of repossession. I believe you can try out now the questions in the mini case. Okay, and we will discuss, hopefully you can do question 1 and question 3 of mini case hire purchase, and please do that and bring the answer in the next class so that we can discuss the answers. Okay, with that, I thank you.